JB here. Tuesday, May 20th, 8:58 a.m. Talk really quick about the marks. Some names I'm looking at go from there. It's gonna be a quick rant. Not too many. Well, there's plenty of names to always talk about. Um, but take a look at futures. S&P down about 0.25% on the heels of its sixth session rally, right? And that this is after you take out that week of choppiness. Uh, we would have had, I guess it would be 10 days in a row. I forget the whole rally, but the S&P is up 17 of the past 20 sessions. So pretty impressive stuff. And then leave it up to Market Watch every morning. Now I always go there. I look at all different uh, FinTwit sites and publications and what have you. And it's just one of them that always sticks out to me because over the course of the decades that you do this, it's always the same stuff. The fear, uncertainty, doubt. It's like if the market was down 17 of the past 20 days, there'd be some kind of fear thing, oh, market's going to crash further. And then when the market's going to rally, it's the same thing. Oh, market's going to fall again. So again, this morning, Morgan Stanley investor warns of three big disconnects with the stocks on the verge of a bull market. So right now, the S&P, based on its closing price, is still like a fraction away from being technically in a bull market, which would be 20%. Maybe we'll get that today. But if you had read everything over the weekend, you would have thought we would have been down, limit down on Monday. Markets were going to get destroyed. Yields were going to go to the moon. And that was far from the case, right? Markets found a bid right at the open, and boom, we were in the green or trading near the green for most of the morning, and then melted higher into the afternoon into the green and closed slightly higher. Just remarkable resiliency, right? And then the ironic thing is the 10-year yield was lower yesterday. So, I was putting it in the watches yesterday and talking about I think that credit rating cut is like 12 or 15 years too late. It's like it's already been done by the other two agencies. So I don't agree with either of those. I mean, the U.S. says it's going to default on its debt, but uh, anyway, we'll see. It's just another one of those items that the market continues to climb that wall of worry, right? And I was told the deep seek. Now we have the credit downgrade. We have the tariffs. You can go on and on, right? I mean, it seems like eons ago we we had the Silicon Valley Bank situation, right? The big bank run. Everybody thought that was that the regional banks were going to start the whole scenario of bank runs and the whole financial markets were going to collapse. And that seems like eons ago. So, all right, rants for other days. So now, just so take a look at the SPY. I thought 586. That was the pre-market low yesterday. To 597 on the SPY. So maybe some consolidation between those two ranges. I hope we don't break under 590. But if we do, that'd be the spot I'd be watching, 586. And then on the flip side, you have to think, if we chop around, we have Home Depot this morning reported their first earnings miss in 5 years. I don't think that's as big a deal. Their commentary came out saying they don't have plans to raise prices. So, manageable, I guess will be the term for that. And then tomorrow we have Target. So hopefully Target can kind of ease some worries around that whole Walmart comments last week. And then I think maybe we set up to over 600 into the holiday weekend, which I think we set things up well. Also, here's the yields. All right, so that's quick. That's quick on the overall market. So just the individual names. Reddit's been a cash cow over the last couple of weeks. I was watching yesterday on that downgrade from Wells Fargo. I'm like, I don't get how you drop the price target $60 on monster earnings. So needless to say, once it started to bounce, I was looking for some calls there. And it heck of a lot less expensive this week than they were last week. Got some to play for moving to the 120s. 110's the big spot. I'll probably hold those till expiration just because it's been so volatile. I mean, even a move last week, it was at 111, ran all the way up to 119, back down to 114, and then took off all the way up to 129. That was last Wednesday. So can't rule out a move like that. So I'll continue to hold the Reddits. And then the Biogen calls. Back in Biogen again. It's one of those under the radar names nobody's really looking at. Cross over the 50-day moving average for the first time since the end of March. I don't think it will take much for a 5 to 7% move. If that happens, the 135s will be some serious multi-baggers. So I'll look to close some out on the way up. Hopefully cross over 130 after the open. And then ride the rest for a possible move over 135. Crazy stuff. Solar Edge gave back some of last week's gains. Reports out there yesterday that the new tax bill might have credits or solar and energy credits expiring sooner than expected. I don't know if that was the case because it didn't rally as much on the other way of the news. To me, it's just some consolidation or some profit taking after the big run. I still think this heads up into the high 20s, so I'll continue to hold my June strikes. And if it shows strength here today, I might look for some spec calls. Then other names, Cigna kind of frustrating here. I was watching all day. Well, I traded on Friday. Then I was watching all day yesterday, and it was just stuck at 320. And I'm like, I don't want to be, I don't want to see the premiums just erode to 335s. Look interesting on a risk reward basis. And then sure enough, it's gapping over 330 this earlier this morning. So it's 327 right now. I'll see what the calls look like. If the 335s or even I think it's the 337.50s look decent on a risk reward basis, I might nibble some of those. Like I've been saying, this whole uh, negative United Healthcare should be a positive for Humana and Cigna. So, and you take a look, 340 looks like the key spot for Cigna. So I won't be surprised if it trades up near 340 into the end of the week. Still eyeing some deck. Deck flies a pancake yesterday. All that does is kill premium. So might revisit if it shows some strength here today. Maybe if it breaks over 130, probably the 155s look interesting on a risk reward basis. Ride some into earnings, or at least close them out into earnings, and ride the rest. If I can't do that, I'll probably lock them all out. I don't have 100% conviction on holding calls into earnings because it could just be a repeat. And either the stock stays flat or falls. So I don't want to be in a spot if that happens. And then boring, lackluster sessions for VKTX, GameStop, Roku. Need Roku to break over that 200-day moving average over 72. Uh, VKTX, it's like autopilot. I'm not going to add any strikes, so it could drop down to 24 bucks. I'll continue to hold my August calls because it's more of like a binary play into the data. I think that's it. I'm still looking at Pool too. So, Pool, I was talking about Buffett back to back, or at least I should say Berkshire Hathaway back to back insider buys. Well, not insider buys, but they added stakes of Pool. Um, some of the stakes, I think it was Ulta. I think it was Ulta. They did a stake in the stocks went nuts, and then they said, hey, they sold the stake. With Pool, they bought the stake, and then they added more this last filing season. So I mean, to see the stock still sitting here, we're coming in a seasonally strong period with obviously the summer. Um, they have a 600 million share buyback. The stock does a dividend. I just think it heads higher. It's just the only issue is that it's the increments are $10 increments and their monthly strikes. The liquidity is rough on the options and the spreads are wide. So even if I got the 350s at 360, if I wanted to get out, I'll probably lose money trying to get out. So if I see a decent strike open up or the liquidity gets a little better on those strikes, I'll look to get some calls there on Pool. And that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.